This is Nightly Business Report with Bill Griffith and Sue Herrera.
In the spotlight, Apple hosts one of its biggest events of the year, but it's not the new iPhone that's getting all of the buzz. It's Apple's services business.
New menu. McDonald's is making major changes, but it has nothing to do with fast food.
Bigger target. State attorneys general are setting their sights on one of America's richest families as they take aim at the opioid epidemic. Those stories and more tonight on Nightly Business Report for Tuesday, September 10th.
And we do bid you a good evening, everybody, and welcome. Things are definitely changing at Apple. That was apparent at the company's annual showcase today. Yes, the iPhone is still its flagship product, and yes, 3 new versions of the smartphone got a lot of attention. But clearly, Apple is looking for new areas of growth now, and just as it transformed the phone and music industries, it's now betting it can do the same with streaming. Apple today announced a start date for its Apple Plus service. It also announced how much it's going to cost consumers. And that news sent shares of competitors like Netflix, Disney, and Roku lower. Julia Borston takes a look at Apple's shifting strategy for us tonight.
Hardware, software, and services. That's what Apple CEO Tim Cook says the tech giant is focused on. And Cook revealed key details about the services they first announced back in March. Apple TV Plus will cost $4.99 a month. The first shows will launch November 1st, with more shows added monthly. And the first year will be free for those who purchase an iPhone, iPad, Apple TV, or MacBook.
Our mission for Apple TV Plus is to bring you the best original stories from the most creative minds in television and film. Stories that help you find inspiration, that are grounded in emotion, truly stories to believe in. Stories with purpose.
That $5 a month price tag coming in at just half of what some analysts projected Apple TV Plus would cost. Now, the service won't have the same kind of library as other streaming services, but from a price point, it will be less expensive. It compares to $13 a month for Netflix's most popular streaming service and $7 a month for Disney Plus.
This is the new era for Apple, where they're trying to move out from being just an equipment company into more of a recurring revenue business, whether it's $5 a month or $10 a month. This is part of the new story of Apple.
Apple also announcing details of its Apple Arcade streaming game service, $4.99 for unlimited access to 100 exclusive games, launching September 19th in over 150 countries, as Apple looks to lure more people over to its services. For Nightly Business Report, I'm Julia Borston in Cupertino, California.
On Wall Street, stocks finished mixed and were weighed down by a decline in tech shares. Bond yields were higher, oil prices just a bit lower. The Dow Jones Industrial Average rose 73 points to 26,909. The Nasdaq fell 3, and the S&P 500 up a fraction.
As the trade war with China drags on and more tariffs are introduced, 2 new reports out of that country today show that its economy may now have a pricing problem. Eunice Yoon is in Beijing for us tonight.
Beijing got 2 bits of bad news on prices today. First, China has a pork problem. Pork is seen as a staple in the diet and a social stability issue. So the government is highly sensitive to dramatic changes in pork prices, which it got today. Prices for August jumped by 47%. Beijing has announced new measures to fight African swine fever, which has devastated China's pig population. It released emergency pork from its strategic reserve. And just today, a state paper posted a headline that appears to be attempting to convince Chinese that they don't need their beloved meat, saying eating less pork is good for you. And on social media, your wallet and body will thank you. However, the worst news for policymakers is on the producer price side. The PPI fell at its fastest pace in 3 years. Manufacturers are struggling because of the trade conflict with the U.S. and weak demand. Most economists believe that even with the surge in pork prices, that the authorities here are going to want to prioritize battling the deflationary risks and will press ahead with stimulus, possibly interest rate cuts, this year. For Nightly Business Report, I'm Eunice Yoon in Beijing.
And it's not just a trade deal with China that investors are monitoring, but also one with Canada and Mexico. And it's now crunch time for the administration to get the renegotiated NAFTA deal, now known as USMCA, done. Kayla Tausche is in Washington.
This week, the White House revved up its push to get Congress to pass USMCA, a deal it says has bigger impact than ongoing talks with China.
We actually export close to 5 times more product to Mexico and Canada than we do to China. So USMCA really is the big deal. We're hoping to get this thing done within the next 30 to 60 days.
The deal needs Democrats on board. House Speaker Nancy Pelosi will determine if and when a vote comes to the floor, depending on whether top trade officials make some changes. In negotiations, Democrats have prioritized making sure Mexico is implementing new labor reforms, enforcing environmental protections they say NAFTA overlooked, and assuring that any changes for pharmaceutical companies won't raise drug prices. Business and farming groups are descending on Capitol Hill to push for the deal's passage. Pork producers say Canada and Mexico make up 40% of their export market. Automakers want certainty on their supply chain. North Dakota rancher Shelly Zish would like clearer labeling on American beef, but says even without that, it's better than no deal.
It's difficult to sell your product when there's nobody available to purchase it, when there's tariffs that raise their prices so high they can't afford it.
More than 9 months after the 3 countries signed the deal, Mexico is the only one to have ratified it. Elections in Canada next month have held up passage there. In Washington, the White House and Republicans say they already have the votes. Democrats say they're not there yet. U.S. Trade Representative Robert Lighthizer has yet to start the official countdown clock on the deal until he's absolutely sure they have the support. For Nightly Business Report, I'm Kayla Tausche in Washington.
Job openings fell for a second straight month in July. According to the Labor Department this morning, openings dropped to 7.2 million. That's down from the all-time high of 7.6 million, which was hit late last year. That report also showed a rise in the so-called quit rate. That's a sign of worker confidence in the job market.
House Speaker Nancy Pelosi will reportedly release an ambitious plan on drug pricing. A draft summary shows that the proposal would allow the federal government to negotiate drug prices on up to 250 Medicare-covered medicines with few competitors. It would also require manufacturers to offer the agreed-upon prices to private insurers. Reaction was mixed, with Merck falling and Pfizer and Eli Lilly rising.
Well, there's still a lot of questions about what opioid maker Purdue Pharma is going to do next. There's still a chance that it could settle with the state attorneys general, or it could file for bankruptcy. And if it does that, the Sackler family that owns Purdue will find itself in an unwelcome spotlight. Meg Terrell explains.
They're among America's richest families. The Sackler name adorns institutions from universities to art museums. The source of their wealth, Purdue Pharma, and the blockbuster opioid painkiller, OxyContin. And as Purdue is now at the center of thousands of lawsuits from states, cities, and others over the toll of the opioid epidemic, the Sacklers are becoming a bigger target.
We have evidence that Richard Sackler and other members of the family are directly involved in sales conversations, marketing, planning. They accompanied sales representatives on calls. They are a part of the entire enterprise in a way that is generally not normal just for people who own a share of the company.
Ahead of the first federal trial in the opioid lawsuit scheduled for October, Purdue and the Sackler family have been in settlement discussions with state attorneys general and others. But according to several of those state AGs, the two sides aren't on the same page. And the company has reportedly threatened to file imminently for bankruptcy if a settlement isn't reached this month.
Going into a free-fall bankruptcy is going to be problematic for the litigation and for the attorney generals.
The states want to see more money guaranteed from the Sackler family. But in addition, they say if Purdue files for bankruptcy, their attention will turn directly to individual Sackler family members.
If we can come to terms, there's no need for me to sue the Sacklers individually. If we fail and the company goes into bankruptcy, but the Sacklers do not, then at that point, I will have no choice but to sue them individually.
The Sacklers are already named in several state suits, and it wouldn't be the first time the family's been involved in litigation. A just unsealed deposition video obtained by Stat News and ProPublica reveals questioning of Richard Sackler, former chairman of Purdue.
Do you believe that any of Purdue's conduct has led to an increase in people being addicted in the Commonwealth of Kentucky?
No.
Purdue agreed in 2015 to settle that case with the state of Kentucky for $24 million. States now are looking for a lot more.
They extracted billions and billions and billions and billions and billions of dollars from this company over the last decade.
A spokeswoman for Purdue Pharma declined to comment, while representatives for the Sackler family didn't immediately respond. For Nightly Business Report, I'm Meg Terrell.
It is time to take a look at some of today's upgrades and downgrades. Wells Fargo downgraded to neutral from buy at UBS. The analyst cites the potential for lower interest rates to eat into net interest income. The price target is $49. The shares fell a fraction to $48.31. Dollar General was downgraded to market perform from outperform at Bernstein. The analyst cites less certainty when it comes to future sales and earnings growth. The price target is $145. The stock fell 2% to $157.09. Altria was downgraded to neutral from overweight at Piper Jaffray. The analyst cites increasing regulatory scrutiny of Juul, as well as its potential merger with Philip Morris. The price target is $49. Despite the downgrade, the stock was up a fraction to $44.24.
Still ahead, holiday hiring. Companies need workers, but where will they find them? For years, the growth engine of the fast food industry has been its food. But now you can add artificial intelligence and voice technology, which is what McDonald's is doing. Today, the burger chain made a new high-tech investment, but its shares fell about 3.5%. Kate Rogers has more.
McDonald's may be a fast food giant, but it's leaning ever more into technology. The company is acquiring Apprente, a voice technology startup that uses artificial intelligence to understand drive-through orders. Eventually, the technology may be applied to McDonald's mobile app and self-order kiosks. This is McDonald's third technology deal this year. The move comes after its acquisition of Dynamic Yield for $300 million in March, the company's largest acquisition in 20 years. Dynamic Yield's technology is being used in more than 8,000 drive-thrus across the U.S. to personalize the experience with food displays based on time of day, weather, traffic in the restaurant, and more. McDonald's also invested in Plexure, a mobile app vendor, to continue the development of its global mobile app. As fast food competition ramps up with apps, delivery deals, and menu wars, McDonald's is relying on technology to help improve service speed and the overall customer experience.
I think the more important thing here, too, is that McDonald's could be building something down the road. You see the potential for an experience of the future 2.0 with all the technology initiatives they've been making, which potentially could unlock new formats or new business models for this company down the road.
CEO Steve Easterbrook, who's been at the helm for about 4 years, said his initial focus was on turning around the business with restaurant upgrades. Now Easterbrook says the focus is on new opportunities to drive growth.
How can we help continue to elevate the experience for customers? So, with this pace of change in the world and with different technology and different innovations around, whether it's around food, technology, design, we're seeing opportunities that we think can either make the experience more fun, more enjoyable, or smoother for customers. And if we can find that, we're going to go hard at it.
As McDonald's ramps up its tech investments, it's also expecting to expand its footprint in Silicon Valley. The Apprente team will be the founding member of a new part of McDonald's global technology team called MCD Labs. McDonald's says over time it will add more data scientists and engineers, shaping a fast food future that's very different from its past. For Nightly Business Report, I'm Kate Rogers.
Wendys said it's making a different kind of investment. That company is investing $20 million into expanding its breakfast offerings nationwide by next year. As part of that expansion, it will also hire about 20,000 workers. That investment caused Wendys to revise its outlook lower, and the stock slipped 10% in trading today.
So McDonald's is betting on new technology. Wendy's is betting on new menu items, which will provide the fast food industry with the fastest growth in the future. Joining us to talk about it, Gil Luria is Director of Research at D.A. Davidson. Good to see you. Welcome back.
Thanks for having me.
I mean, clearly McDonald's betting on technology for ordering, for payment, for delivery, when Wendy's is betting on food. Who's got it right at this point, do you think?
McDonald's really needs this technology in order to be successful. The efficiency gains they can get by implementing technology properly are going to be immense. Every 5 seconds, they shave off the drive-through line. They get more customers through the door and drive growth that way. On the other hand, Wendy's has tried to introduce breakfast in the past with little success, and that was the negative reaction today to the share price, was that people are concerned that they will, again, not be successful.
Well, they're also up against McDonald's, which is a juggernaut in breakfast, but there's a big difference in scale, is there not, between a McDonald's and a Wendy's?
That's right. McDonald's is considerably bigger, which is why they can afford to invest so much in technology. When they get these incremental gains in throughput, it creates immense growth and value for McDonald's, where the smaller chains have a harder time investing in technology and getting those types of gains.
So in your view, who are some of the winners and losers going forward, depending on their strategies right now?
Whoever gets technology right will be a winner. The best examples of that are Starbucks, which has leveraged its mobile app and loyalty program to drive significant growth. Even companies like Domino's, whose product wouldn't necessarily stand out on its own merits, because they have the best app, they've been able to outgrow their competitors. So technology is going to be very important going forward for all these fast food and delivery type restaurants.
Okay, those are the winners. Who's behind in this game?
The ones that don't catch up, the subscale fast food restaurants, they're going to continue to lose share to the quick service and fast casual restaurants. It's a crowded field. We mentioned Wendy's breakfast. There's a lot of other fast food breakfast options out there. It's very competitive, and the competition comes from other sources. A lot of the conversation this week has been about chicken sandwiches, right. Popeye's chicken sandwiches, Chick-fil-A chicken sandwiches. That's where a lot of the competition's coming.
And, of course, fake meat as well. Gil Luria with D.A. Davidson again. Thanks for joining us tonight.
Thank you.
Boeing delivers fewer planes in August, and that's where we begin tonight's market focus. The company delivered 18 aircraft last month, which was down from 64 during the same period last year. As the grounding of the 737 MAX enters its 7th month, Boeing says it expects to receive certification from the FAA by next month to put the planes back in the air. Shares rose about 3% to $369.49. New York City is suing Chipotle for alleged labor law violations. The lawsuit claims Chipotle failed to provide estimates of work schedules, as well as not paying premiums for last-minute schedule changes. The city is seeking at least $1 million in compensation. Shares fell more than 6% to $787.98. After the bell, the home furnishings company RH easily topped expectations and raised its full-year outlook. RH also said it does not expect the current China tariffs to impact its business goals. Shares were volatile in the after-hours trading and closed the regular session up about 3.5% to 158.88.
Moody's downgraded Ford's debt rating to junk status today after concluding that the automaker faces a lengthy and costly restructuring with weaker cash flow. Separately, Ford says it's going to be introducing 8 electric vehicles in Europe this year. The plan there is for the majority of Ford sales in Europe to eventually come from electric vehicles by the end of 2022. Shares fell more than 1% today to $9.42. Uber is laying off more than 400 technical workers, or about 8% of its product and engineering staff, only weeks after laying off a similar number from its marketing division. The company's been under intense pressure since its IPO in May. It lost more than $5 billion in its most recent quarter. Uber shares rose about 4% today to $33.51. And Target is gearing up for the holiday shopping season. They are planning to hire more than 130,000 seasonal workers. That's about 10,000 more than last year. And the retailer says it's going to pay those holiday workers a starting wage of $13 an hour. Target shares rose a fraction today to 108.83.
So what does the increase in temporary workers for this holiday season mean for the economy? Mark Hamrick joins us, senior economic analyst at Bankrate, and he's going to tell us exactly that. Welcome, Mark. Nice to have you here.
Good to be with you, Sue.
This is also coming at a record tight labor market. So the retailers and the shippers may want to add all those seasonal workers, but where are they going to get them and how much are they going to have to pay them?
Well, you referenced at the top, they may just have to pay people more money, and that's part of the equation here. It's interesting, Sue and Bill, though. We got the job openings numbers, as you referenced earlier today, and the number of job openings in retail in this latest month is down some 15% from a year ago, and it's even a more dramatic decline in the wholesale trade. That number is down almost 30%. So I think that overall we'll probably see flattish numbers in seasonal hiring, while consumer spending is up more than 5% year over year. We know that job cut announcements have been running hot in the retail trade, and so among other things, some of these retailers are going to be able to find displaced workers, but also find people who may be drawn into the workforce, as we saw in that August employment report.
Flattish compared to last year, but still, when you think about it, I mean, just in the last few days, the back of the envelope numbers tell us that there are about 280,000 job openings. When you talk about the UPS hiring, Target's hiring, Amazon's hiring, now Wendys hiring another 20,000 workers. I mean, that still sounds like a pretty strong labor market right now, clearly.
Well, I think, Bill, over the last previous 4 years, we've actually been seeing the number of seasonal hires decline in retail. So we'll see whether this year marks a strong uptick there. Let's remember also that in the context of the broader labor market, there's still millions of workers who are working part-time that would like to have full-time work. And we still do think that we can have increased labor market participation. We know that some enterprises have been changing what they're willing to, quote unquote, accept with respect to workers, doing things like allowing people to be employed who might have some criminal past or even unable to pass a drug test. Not necessarily optimal, but they're having to shake things up a bit.
Right.
And as you mentioned, they may have to pay people more. And if that is indeed the case, even though it may be a seasonal or transitional period, what's the economic impact of that?
Obviously, it weighs on profit margins. And, in a way, you have to feel for retailers right now because they're being hit by a virtual tsunami. Obviously, they're having to manage through the tariffs and trade disputes impact, the uncertainty that is beginning to weigh on consumers somewhat, and then obviously higher costs that are reflected in both labor costs as well as the goods they're importing right now.
Mark Hamrick with Bankrate.com. Thanks so much.
Thank you.
Coming up, going off the grid.
When it comes to energy efficiency, solar power gets a lot of the attention. But increasingly, utilities and homeowners are turning to energy storage units. I'm Phil LeBeau. That story coming up on Nightly Business Report.
Here's what we're watching tomorrow. It should be a busy day. We're going to find out if inflation pressures are building in the economy. The producer price index will be released. Boeing CEO is scheduled to speak at a Morgan Stanley conference, assuming we get an update on the 737 MAX. And Cantor Fitzgerald will host its Charity Day on the 18th anniversary of the 9/11 attacks. That's what we're watching for on Wednesday.
The number of uninsured Americans is higher for the first time in nearly a decade. According to the Census Bureau, the uninsured rate rose to 8.5% last year from 7.9% the year before. That translates into roughly 27.5 million people who did not have health insurance at any point in 2018. The Census Bureau also reports that median household income showed no growth last year at roughly $63,000, and that the poverty rate dropped further last year to nearly 12%.
Finally tonight, a reminder that Tesla is more than just electric cars. Elon Musk's company has also quietly been charging up its energy storage business. But will that be enough to overcome questions about its solar power operations? Phil LeBeau takes us to beautiful Brattleboro, Vermont tonight.
The Cappy house looks like any other charming home in rural Vermont. But Ellen Cappy is all about being energy efficient, from plugging in her Tesla Model 3 to the massive solar panels providing more than enough power for her home and nearby business.
We like the idea that we have, that we can be prepared for whatever and prepared for the future and also to be a part of the future.
Even generating their own power, the Cappies are still tied into their local utility. So they've installed 2 Tesla Powerwalls to store energy and keep them powered up even when there's a blackout.
We got the Powerwall on February 7th, and on February 8th, we lost power. And we didn't even notice. It was seamless. It's absolutely seamless. You don't see the lights even flicker in your house. The changeover is that good.
Tesla's energy storage business charged up this spring, jumping 81%. Meanwhile, Vermont's largest utility is planning to expand Powerwall installations and offer energy storage units to all customers.
It is a cost-saving device for the grid. It's cost-saving for the planet in terms of carbon, and it's cost-saving for the grid because we use it during peak times.
Despite some of the glowing reviews of the Tesla Powerwall, critics say there are only a limited number of people in the U.S. who truly need energy storage to deal with a blackout or a drop in electrical service.
All other things being equal in your average rural area in the United States at this point, it's pretty hard to make residential storage work. There have to be some special incentives in economics to make it make sense.
But for the Cappies, storing their energy has empowered them to feel like they can ride out the next blackout in the area. Phil LeBeau, Nightly Business Report, Brattleboro, Vermont.
And that is Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. We'll see you tomorrow.